The Nasdaq is on track for its best first half in 40 years, driven by a big run in the mega-cap tech stocks. Joining us right now with his squawk picks is Dan Flax from Neuberger Berman. He is senior research analyst there. And Dan, let's talk this through. If we are talking about the best first half in 40 years, does that mean we've run through all the gains, or do you still think that there are places where you see opportunities in the second half?
Good morning, Becky. I continue to see select opportunities into the second half and beyond. It's driven by the companies that can innovate, invest, and ultimately drive good growth. So if we look at a company like Alphabet or Google, they're infusing generative AI into their search platform. YouTube, I think, has good growth prospects, and their cloud business, I believe, is underappreciated. Amazon, I think, is continuing to deliver a lot of value to customers with Prime, such as one-day delivery, and Amazon Web Services, while facing cyclical headwinds, I think remains very well positioned for the next generation of workloads. And I'll also highlight Apple, which is executing well on its product cycles. They do face choppy demand in some of the markets, and I think that remains a challenge. But I think the bigger story is really this empowerment of the developers and the broader ecosystem, which remains vibrant.
You talk about all of these great things that are out there, but let's just keep the Apple chart up for a minute. You look at that run from January through June. How much of that has already been baked in, Dan, and what makes you think that there's even more potential?
I think in recent months, Becky, the market's gotten increasingly comfortable that Apple's able to navigate this choppy environment, and it's driven by this broadening of the revenue drivers. For example, you have services, you have wearables, iPad, Mac, and of course the iPhone franchise, I think, is durable. And so it's not that they're facing, it's not that they're immune from the challenges, but they are continuing to execute. We saw Vision Pro, and that's going to be very small in the next few years, but that's a sign of their ability to innovate. I think what the market will care about into the second half and next year is that growth is likely to improve, driven by their product cycles. You'll have easier compares, and the services business, again, continues to provide a level of visibility and gross margin support.
Okay, so of all of the stocks that have seen these runs, do you think any of the big tech stocks have kind of had their run? Do you think any of them are getting richly priced?
From a valuation standpoint, I think many of them are quite reasonable, and it's not because the near term is easy per se. What it is that I think the market's looking ahead to the next 24 months, and it sees, in the case of Alphabet or Amazon or Microsoft, that there's probably significantly greater earnings and free cash flow generation than what we're seeing today. And I think the market will continue to try and look ahead to that. You of course, have technology transitions underway. Meta's done a good job shifting to Reels. So all of these companies need to execute, but they're continuing to innovate, invest, and that's going to help them grow, in my view.
Nvidia is one of the stocks you like. This morning, it's off by about 4% last time we checked, just on reports that the Biden administration is actually considering some new curbs on the chips that they will allow for sale to China. Does that concern you?
I think it's a near-term risk. We continue to like Nvidia, even with the headlines overnight. I think what we've seen from this company is that if they're able to drive a level of innovation in their chips, in their software, and deliver value to customers in areas like healthcare, for example, with drug discovery or fraud detection with financial services, that adds value. For the very near term, I think demand exceeds supply, and so they'll be able to navigate some of those challenges. What we've seen from Nvidia and others over the last several years with ongoing trade tension and what is likely to remain a challenging environment is that they are able to deliver chips that are allowed or are able to be licensed for a given market. I think we'll see that continue to evolve in China. When I step back, though, and think about the growth prospects for Nvidia, I think across the data center, gaming, markets like auto, longer term, I think it remains robust. And so, yes, there is near-term risk, but I continue to like the name here.
Dan, we've had Greg Brown, the CEO of Motorola Solutions, on the show, but it's not a name that's very frequently mentioned. Why is it on your list?
CEO Greg Brown and the leadership team, Becky, have transformed Motorola Solutions over the last decade. They have a core business in public safety with walkie-talkies and really providing mission-critical solutions for the first responders, the men and women on the front lines. But if we think about the next several years, they've been investing in areas like video and analytics, command center software. And so that's resulting in higher growth for the company and continued margin expansion. And so we see the area of public safety as a key part of our broader society, and that is going to get transformed in the decade ahead. And so Motorola is a leader there. I think Greg Brown has been an exceptional CEO. I think he's continued to nurture a lot of talent. And they remain very, very important to their customers as those men and women help keep all of us, all of the communities safe. So we continue to like Motorola Solutions.
Internet of Things. We used to talk about that all the time, not as much anymore, but you list that as one of the reasons that you like Qualcomm.
So Qualcomm has a lot of intellectual property in key areas like mobile. Part of it's driven by their low power solutions, the security, automation, artificial intelligence processing at the edge. And so this idea of infusing intelligence and connectivity into factories, into cars, into agricultural environments, retail environments, all of that intelligence is getting harnessed to enable the men and women in those positions or machines to make better decisions. And Qualcomm's IP or intellectual property is really at the heart of it. It's what it has enabled them to build a $30 billion design win pipeline in automobiles, for example. And so we see these growth opportunities in the Internet of Things, automobiles, also content gains in the smartphone market, which remains weak in the near term. We do think that those are going to help transform this company, which will lead to higher growth and higher earnings over the next couple of years.